6 months ago, I started my investing journey with a simple goal: grow wealth step by step. I committed to investing $1,000 every month, and now I have a total of $6,000 invested. But how is my portfolio performing? Am I making the right choices? And most importantly, how can you start investing too? In this episode, I'll break down my half-year investing progress, explain dividend stocks in simplest way possible, and dive into ETFs, including why I'm investing in Invesco QQQ. Plus, I'll share some must-know strategies on managing money wisely while still enjoying life. So if you're on your own journey to financial freedom, subscribe to my channel, keep watching this video, this one's for you. Alright, let's get straight into it. My portfolio update. Over the past 6 months, I've consistently invested $1,000 per month, and my total investment now stands at $6,000. The big lesson: consistency is key. It doesn't matter if the market is up or down, the goal is to stay in the game. Some stocks have gone up, some have dipped, but the most important thing is long-term investment. And that brings me to the second topic: dividend stocks. If you ever wanted to earn money while you sleep, dividend stocks are the way to go. But what exactly are they? Let me explain. Imagine owning a business that pays you a small portion of its profits every few months. That's exactly what dividend stocks do. Companies share their profits with shareholders in the form of dividends, meaning you get paid just for holding the stock. Here's the list of top dividend aristocrats. How did I come up with this list? Well, this book, Dividend Investing by Matthew Crader, has mentioned 53 dividend aristocrats. And you can also find these companies in Warren Buffett's portfolio. Now you must be wondering what dividend aristocrats means. Dividend aristocrats are companies that have increased their dividends for at least 25 consecutive years. These are stable, financially strong businesses that have proven they can withstand recessions, inflation, and market crashes while still paying their investors. Now let's talk about something important: why you should invest in stocks with 3% to 5% dividend yield instead of chasing high yield stocks. A lot of beginners get tempted by stocks providing 8%, 10%, and even 15% dividend yields. But here's the reality: if something sounds too good to be true, it usually is. So what are the problems with high dividend yield stocks? A company paying 10% dividends might be burning cash just to maintain it. If profits drop, they may cut or eliminate the dividend. Number 2, stock price decline. Many high-yield stocks lose value over time, so even though you're getting dividends, you're losing money on the stock itself. Number 3, business instability. Companies with extreme yields are often struggling or in decline. Example, risky real estate or energy companies. A dividend yield of 3 to 5% is considered in the golden range because it's sustainable, reliable, and it allows for the capital growth. So why you should invest in dividend aristocrats? Here's why. Number 1, sustainable payout ratios. Companies paying 3 to 5% dividends typically keep enough profits to reinvest in growth. Number 2, low risk of dividend cuts. These companies don't overextend themselves, making them much safer for long-term investors. Number 3, stock price appreciation. Unlike ultra-high yield stocks, dividend aristocrats in this range actually grow in value over time. So why I like dividend stocks? They provide passive income, even while you sleep. Reinvesting dividends helps your portfolio grow faster, the power of compounding. Even if the stock price drops, you still get paid dividends in most cases. Now, what are the downsides to consider for dividend stocks? Well, dividend stocks usually grow slower than tech or growth stocks. Companies can cut dividends during tough economic times. Some high-yield dividend stocks might not be sustainable in the long run. That's why a good strategy is diversification, and that leads us to ETFs. Alright, let's talk about ETFs, or exchange traded funds. Basically, they're a basket of stocks grouped together that you can invest in just like a regular stock. I'm personally investing in Invesco QQQ ETF, which tracks the top 100 tech companies in the Nasdaq, including giants like Apple, Microsoft, Tesla, or Google. Now let's talk about pros of ETFs. Number 1, diversification. You own multiple stocks instead of putting all your money into one company. Number 2, lower risk. If one company fails, others in the ETF balance it out. Number 3, no need to pay for individual stocks. It's great for beginners. And what are the cons to consider? Some ETFs like QQQ mostly focus on tech stocks, meaning they're more volatile. They don't offer huge dividend payouts compared to dividend-focused stocks. ETFs still fluctuate with the market, so patience is key. So should you invest in QQQ? If you believe in tech and long-term growth, it's a strong choice. But always do your own research before investing. Now, investing is important, but it's also not everything. You need to balance it with enjoying life too. Here's what I've learned in the past 6 months. Number 1, automate your investments. I have set up an automatic transfer of $1,000 to my investment account every month so I don't have to think about it. Set it and forget it. Number 2, manage liabilities smartly. If you have debts or loans, prioritize high interest debt first before going all in on investing. Number 3, enjoy life without guilt. Budget for fun. Set aside some money for travel, hobbies, or nights out. Life isn't just about saving every dollar. At the end of the day, investing is about freedom and not just growing your money, but giving yourself options for better future. I'm excited to see where this journey goes next. If you made it this far, I really appreciate your time. Comment below what's your investing goal for the next 6 months. Are you into ETFs, dividend stocks, or something else? Let's chat in the comments. Subscribe so you don't miss out the next episode. More investing, update, and strategies coming soon. Like this video if you found it helpful. It really helps the channel grow. Follow me on Instagram for more updates. I'll see you in the next video.